My name is Jay from the Smart Upstart, and this video is a tutorial on how to use the Smart Upstart's financial projections calculator. Now, if you have just stumbled upon this video, or if you are not quite sure what the financial projections calculator is, it is a tool that lets entrepreneurs such as yourself easily create up to 5-year financial projections. There are a couple of different versions, so depending on the version that you have, you can create anywhere up to 5-year financial projections. It can be used in Microsoft Excel or in Google Sheets. There are a couple of different versions out there for either Excel or Google Sheets, but it's designed so that you can create financial projections in a matter of minutes as opposed to hours or days. So in this video, we'll go over how to use the spreadsheet, how to make some adjustments for those more complex businesses. We'll also go over how to one-click print as well. And with that being said, we'll just go ahead and dive on in. Now, just a couple of things. As you open your spreadsheet, for those of you who have antivirus or any type of software security on your computer, you may receive a warning that the spreadsheet has macros on it, and that macros can contain viruses. I can assure you that the macros on this spreadsheet do not contain virus. They are used for the purposes of a couple of things. They're used to, for one, help navigate the worksheet. So within the worksheet, you will see links or buttons, if you will, that let you easily navigate. They allow you to click on, certain things and go from one page to the other. The reason I used macros instead of hyperlinks, if you will, is that macros just have a little more flexibility. They allow you to do some other things. One of the primary reasons is because this worksheet is filled with tons and tons of hidden pages and lots of pages that will be visible to you as well too. So with that being said, it can get confusing. For example, the income statements and cash flow and balance sheet, each of them, if you have 5 years, well, those are 5 pages each. You can have 15 pages open at the bottom as well as the menus. We don't want people to get confused on which page they're working on or what they're doing. And so the macros that are on the sheet actually close out all of the sheets the pages that you aren't using, so that you don't get confused. The other reason that they're used is that for the one-click printing, they're designed to automatically capture the area that you're printing and print the pages that you use, so that you have a nice, neat one-click printing. So, enable to fully use the sheet, you will have to enable the macros. However, if you are not comfortable doing so, you can certainly email me or message me through the platform that you purchased the spreadsheet, and I do have a hyperlink version. It's created basically to make it easier to navigate. So that being said, we'll go ahead and get started. All right. When you first open your sheet, the spreadsheet, you will come across the main menu page. Now, the main menu page is just designed to help you navigate the spreadsheet. So on there, you'll find the start, links for the start page, the dashboard, charts, income statement, cash flow summary, balance sheet, how you can print the full plan or just print the charts if necessary. So each one of those just takes you to the page that you desire, if you will. We will be starting off on the start page. That's kind of where everything starts for the spreadsheet. So if you click on the start page here, and it'll take just a few moments for the macros to do its job, you will see that it takes you here to the start page. The start page is where you will enter the overwhelming majority of the information to create your financial projections. We'll go over each section of the start page, and then we'll go over each section individually to show you how you can make adjustments or individual changements to account for things such as seasonal changes in business, and things that just may not be able to be covered on the start page itself. So, really quick, I'll just go over the categories on the start page. And then after that, we'll go through and I'll enter some information and I'll show you kind of how that information plays out and what it does as we fill in information and as we create our financial projections. The start page is so you'll first notice that there's an area for you to enter the business name here, as well as the anticipated start date. So that should be some date in the future. Next to that, you'll notice that there's also a menu that allows you to get back to the main menu, the dashboard, the charts, as well as to allow you to print off the plan as well. Now, the dashboard, I'll take a moment just to explain that. In the newer version, I created a dashboard just to give people a visual on what is going on with their financial projections. I did this so that it'll be easier for people to determine where and what changes they need to make if there are any changes that need to be made. And so, for example, it will be easier to see, when you're running out of money and, provide suggestions such as, maybe you need to increase the revenue or there are other things that you can do as well, too. So when we get to the dashboard part, I'll show you that. But I just wanted to really quick explain that we have a cool new feature, which is a dashboard that gives you a visual on what's going on with the financial projections so that you can make tweaks as need be based off of the visuals. From there, we have our income and revenue sources. You'll notice that there's areas to enter the product name, the monthly amount, annual growth, cost of goods. To the right of that, we have an area for our operating expenses. Now, I'll take a quick moment to say something in regards to the start sheet altogether. You'll notice that there are some areas that are shaded in, and then there are some areas that are in white. Initially, when I created the sheet, I created it and it was a locked sheet, and the cells that I did not want people to use were locked. However, I got some feedback from people that it made it a little bit too restrictive, and so I unlocked the sheet. But here's the important thing to know. Within this spreadsheet itself, there are tons of formulas, there are functions, there are hidden things as well too that make the spreadsheet work. With that being said, there are certain parts of the spreadsheet that you should not make adjustments to or make any changements to, or it will quite simply break the spreadsheet. So a rule of thumb for the start page is that if it is a shaded area, you do not want to change that area. If it is a white area, you can change the information in that area. There is a few exceptions to that where it's giving some totals and doing a little bit of math, and I'll point those things out to you where you don't want to change those because it will break things as well. But for the most part, where you see the areas that are shaded, you do not want to make any changes to those areas. And as I get to entering in information, I'll explain a little more in depth, but I just wanted to take a few moments to explain, do not change anything in the shaded areas, if you will. All right, so we have our income, revenue sources, operating expenses. As we scroll down, we have our startup costs. These are our one-time costs, if you will. To the right of that, we have our financing. We have options for entering our loans. There's up to 4 loan options that you can enter in. There's a section here over here to the left for any current or existing assets for our existing businesses that are already up and going. As you scroll down further, there is a section for the owner's equity and liabilities. There are also other expenses, a section for payroll, income tax, interest earned. And then over to the right on the bottom is one of the cool new features that we added, which is our break-even analysis. I'll talk a little more about that as I enter it in, but we added a break-even analysis to basically give entrepreneurs another tool to help them as they create their financial projections. So with that being said, we'll go ahead and get started with creating our new business here. For this particular business, I'm going to start off with creating a cafe. I used to own a cafe, so it's always fun for me to just kind of enter in financial projections and pretend that I'm doing my Cafe over again here. So I'll just call it Jay's Cafe. How about that? Ooh. All right. Jay's Cafe, and we'll have an anticipated start date of January 1st, 2030. I like that date. That'll give me some years to plan, a lot of years to plan. But we'll leave that in for right now as the anticipated start date, and then we'll move on to our income and revenue sources. Now, over here for the income and revenue sources, you'll notice that there is a space for 15 product names. Now, there are a couple of ways that you can do this. When I designed the spreadsheet, I designed it with the idea of product categories in mind. However, I know that there's a preference for some people to do individual products. You can do it either way. Just keep in mind that if you list individual products, the limitation is 15. You cannot add cells or rows to it because it will break the spreadsheet. If you find that the 15 products is not enough, then I recommend that you use product categories instead of specific products, if you will. And here, I'll give you an example of that just by starting off, if you will. So let's say, for example, in Jay's Cafe, we're going to sell coffee. We're going to sell cookies. We're going to sell specialty coffees. Let's say we're going to sell donuts. Okay, so this is enough to give my example. So these are all individual products. Now you can do this, or you can do things such as instead of separating cookies and donuts, you can say that we're going to sell bakery, and we'll group those into one. We'll leave the coffees as specialty coffees. I just want to capitalize it here. And then we'll leave this as coffee. So we have a space for our regular coffees, our bakery, our specialty coffees such as our espressos, etc. And then for here, we'll just put product name back. Put it back the way it was. Here's what is that product name for? All right, so that gives us 3 products to start off, and this will be just enough for us to do our demonstration here. So we start off with entering our product names, and again, I use product categories just because it's easier for me, but you can use individual product names if you choose. Now, from there, we're going to start off with a guesstimation of what we believe our monthly revenue will be for each individual product. Now, if you're starting business, you have no clue what this is. It is a guesstimation, but as you'll see, as we get into the spreadsheet, that dashboard that we have there, the dashboard is designed to help you kind of make some decisions based off of what you see there on the visuals. So we'll start off by just plugging in some numbers on what we think our monthly revenue will be. Now, if you're existing business, you have an idea of what your monthly revenue will be, but for those that are just starting off, we'll just kind of plug some things in and kind of go from there. So let's say we're going to have a really busy coffee shop and we're going to do, I don't know, $2,000 a month. That's probably not busy for a lot of folks, but I used to own a coffee shop. Trust me, you're lucky if you do lots of coffee. Anyhow, let's say bakery's going to be really popular for us, and we'll do twice as amount for that for bakery, $5,000 a month. Specialty coffee is going to be really popular as well. So let's say we do $4,000 a month for specialty coffee. Now that gives us a starting point for what we think our monthly income will be for each of our products. Now, if you have more products, you'll just continue to go down the line, enter in the product name, as well as the amount that you think you'll bring in for the monthly for it. Now, from there, what we have to do is we have to do a little bit of anticipation for what we think the product will grow monthly. For example, we think that we'll start off selling $2,000 monthly for coffee, but we think that that'll grow in the future. We think it may grow by 5% or 10% or whatever that number is. It's entered in as a percentage. So you'll simply just enter in a percentage such as 10. Now, what this does is when we get to the income statement and the rest of the projections, it automatically does the math to show a gradual growth on a month by month basis, with the end of the year being a 10% growth, is what it does. And then it repeats that year after year. So, year one, it'll show you slowly growing by 10%. Year two, same thing, slowly growing by 10%. Year three, etc., if you will. Now, I understand that certain businesses don't simply just grow like that. Businesses have ebbs and flows, ups and downs. I will show you later on in the spreadsheet where you can make adjustments for those businesses that don't simply just go up each month by month in revenue. As we know, that's not realistic in most businesses. There are months where they're up, months where they're down. You can make adjustments for those to account for it as well. So I'll show you that a little bit later. All right, we're going to say that the bakery is really popular. That grows by 15%. Specialty coffee is even more popular, and we'll say that grows by 20%. Just making up numbers here. Now, from there, we will need to determine our cost of goods sold. Now, for those that are not familiar with cost of goods sold it is basically what it costs you to produce the product. So, for example, with coffee, you may be purchasing coffee bean or other ingredients that go into making that coffee. If it's a specialty coffee such as espresso, you may be using milk or flavors, etc. Whatever the ingredients are that go into making up that particular product are would make up the cost of goods. In most instances, the cost of good is represented by a percentage of the product. So let's say, for example, you are selling a cup of coffee and you sell it for $2. And let's just say the cost for buying the bean and whatever else goes into it costs you 50 cents. Well, that would mean you have a cost of good of roughly 25%, not even roughly, just 25% cost of goods. So it's costing you, out of that $2, 25% of that is going back to, is what it costs you to produce that product, if you will. Now, this spreadsheet does not have a cost of goods calculator built into it. You will need to know the cost of goods for each of your products. There are some awesome cost of goods calculators that I found online as well. So you can definitely find one of those. But for this spreadsheet, you will need to have an idea of what your cost of goods are. We do plan on adding a feature in the future that does do the cost of goods calculation for you, but this one does not. So we'll say our bakery and food's usually pretty expensive. So let's say it costs us 50%. Specialty coffees usually cost you 50 cents. They charge you $5, so whatever. So those are our costs of goods. Now, you'll simply repeat that process for each one of your products in the income and revenue area. And when you're done from that, we'll move on to our next section in the tutorial. For our next section, we will enter in our expenses. You can now, the spreadsheet is designed, you can enter it in either any kind of way that you want. We're going to kind of go from left to right here, from income to expenses. If you want to, and you are more comfortable with going just strictly down the left side of the spreadsheet and entering information, you can certainly do that as well. But I know that a lot of people like kind of being able to look at the income and expenses side by side. One of the differences between our earlier design and this design is that the earlier design had everything in one long, kind of column, if you will. Whereas this one, we kind of spread things out to give you a little bit of a wider view so that you can look at things like income expenses side by side next to each other. So that being said, we'll jump into entering the expenses here. So one of the things that you will notice as we begin to enter the expenses is that some of the areas where the names of the expenses are shaded out and the names are already entered in. I mentioned earlier that on this particular page and in the spreadsheet in general, if you see an area that is shaded, it is an area that you should not change because it will break the spreadsheet. And this is one of those particular cases. For the operating expenses, what you'll see here is that we have a handful of the most common operating expenses that people will have. And if that's not enough room, you'll notice that below that there is space for you to enter any types of expenses that may not fall under the categories for the ones that are entered here. Now, the reason that these are grayed out and the reason that you shouldn't change these areas as well as the other shaded areas over here or try to do anything with those areas is that this is all tied into determining your break even. And so there are certain expenses that are considered fixed versus variable expenses. And we don't want to change those things and screw around with the categories. So what we did with designing this spreadsheet is we simply came up with a list of the most common used expenses and then left space for any expenses that we may have missed, so that you can enter those in there. So what we'll start is with our wages and payroll. Now, you will notice that a couple of things. One, you'll notice that there is a startup month for expenses, and then there's a monthly, and then there's also a percentage of income. This is very important to pay attention to. So the reason that there is a startup month and then also a monthly is that because oftentimes when we are starting businesses, there are startup costs that are outside of the normal costs. For example, if you're starting a new business and you want to get a lot of people through the door initially, you may spend a lot more money in your startup month for advertising and marketing. If you're having internet or telephone installed, you may have some installation costs for that startup month before you get into your regular monthly cost. So what we did on this spreadsheet is we separated the startup month versus what we expect the monthly expenses to be to give you that easy flexibility to say, hey, these expenses for the first month are going to be either a little more or a little bit less. Wages is another one. You may have training and extra hours for your staff when you initially start off for your startup month before you fall off into your monthly. And then there are other people that may not. You may start off with a much smaller wage as you ramp up, and then as you get into your monthly and business starts to take off, and you may add, more staff from there. So we'll start off by entering our startup monthlies for some of the more common expenses, and then we'll go through and we'll enter our monthly cost form as well. We'll talk about the monthly cost when we get to that part of it, because there's something you definitely want to pay attention to when we get to the monthly cost versus the percentage of income. All right, let's do it.